All right, welcome back to video three. Going to try to finish up the chapter two videos with this one. It might get a little long. Um, we'll get into it and I'll show you. Um, Example of itemizing versus not itemizing. You can see here we've got adjusted gross income of 200,000 for both these people. Itemized deduction, we've got property taxes, home mortgage interest, and charitable contributions. For a total itemized deduction, 37,000. That's a deduction from AGI, giving us a taxable income of 163,000 versus here we've got 200,000 standard. Here's our taxable income. If you can itemize, you want to itemize. A lot of people don't because it is kind of a high bar to clear. But if you can, obviously you should. Dependency exemptions qualifications, you've got tier one and tier two requirements. I would probably print this slide off or watch this YouTube video. Um, it gets into a lot of different exemptions there, relationship test, gross income, support, abode, age. There's a lot of things of whether the dependent is exempt or not. I would say watch this video and we'll go into greater detail. ID. Okay, so tier one criteria for dependency exemption. We've got ID number. You got to have a separate social security number. Got to be a U.S. citizen or legal resident. Separate return test. Generally, the dependent can't file joint return with spouse, but there is an exemption if your dependent files joint return only to obtain the refund. Tier two criteria, dependent is a qualifying child. This is the relationship test. People who can are the taxpayer's natural, adopted, foster, and stepchildren, taxpayer's siblings, half siblings, step siblings, and any descendants of the above, and adoption. Legal adoptions are the child being legally placed in a home. That would also be a qualifying child. And here we have the age test. Under age 19 or permanently and totally disabled, and that qualifies for any age, which I have seen. Or a full-time student under the age of 24, qualifying institution, like you guys would all be qualifying dependents on your parents' tax returns, being that you're assuming you're a full-time student and under the age. Abode test has to have the same principal abode as the taxpayer for greater than half the year. And the support test, the dependent can't provide more than half of his or her support. You know, if you were kicked out of the house at 18 and you've made your way through the world and you're working full time, you're going to school full time, and your parents don't support you at all, they can't be claiming you on their tax return. You are not a qualifying dependent for that. You would be filing your own tax return. Other qualifying individuals, you got to fall into one of these categories. Related, you don't have to live. You got to be qualifying child, parents, step parents, certain in-laws, taxpayers, cousins, wouldn't qualify. Resides in the taxpayer's home the entire year, families related to one spouse jointly. If you have someone who marries someone with a kid, I mean, so they would be stepfather or stepmother to this child. They would still be a qualifying individual, qualifying dependent. You got the gross income tests. Dependent's taxable income must be less than $4,400. The support test, this one you do see quite a bit in practice. Taxpayer must provide more than one half of the dependent's financial support. Tiebreaker rules. These do start to get kind of interesting. If more than one taxpayer can potentially claim an individual as a dependent, and the possible claimants are prioritized in order of greatest claim to least. Taxpayer can claim under qualifying child rules versus relatives. Parents have greater claim over non-parents. And if one and two don't apply, then exemption goes to the taxpayer with the highest AGI. Multiple support agreements. If a group provides greater than 50% support, but no one person provides it, then the eligible members can designate one person. This I don't see a lot of, but it's still good information to know. Eligible members must agree in writing. Claimant must complete a multiple support declaration. MSD trumps tiebreaker rules. That's the multiple support declaration. And the taxpayer who can claim under qualifying child rules can't transfer to another taxpayer who can claim under dependence rules. You don't see these a whole lot, but they are kind of interesting. Here we've got the Form 2120, which shows that MSD parental release, exemption is awarded to custodial parent. This is the more interesting stuff to me, anyways. This is all good information to know, but you don't see it a whole lot. I kind of prefer the stuff that I see in person. Brain space being limited, you want to really remember and get down the things you see a lot. So we've got the refundable tax credits, you've got withholding, estimated tax payments, overpayment of prior year tax, excess social security tax, child care credit. Then you've got non-refundable credits, education credits, American Opportunity Tax Credit, foreign tax credit, credit for the elderly and disabled, business energy credit, child or other dependent care credit. So child credits. This is section 24 of the code. You claim $2,000 credit for each qualifying child or $500 for other dependent. That is partially refundable. Refundable versus non-refundable. I should probably go into that quick. Refundable, if can drop your tax liability lower than zero. If I had a $2,000 credit coming my way, but I had a tax liability of $1,000, I would get $1,000 back. Right? It'd be two less the $1,000 liability. That's where I get my $1,000. Non-refundable credit. If I had a $2,000 non-refundable credit and $1,000 tax liability, I don't get that back. I just net out to zero. Non-refundable cannot drop below zero. I can't get a refund for a non-refundable credit. I can from a refundable credit. Qualifying child has the same definition as for dependency exemption. Credit is reduced by $50 for every $1,000 over $200,000. And partially refundable refund is limited to the lesser of 15% of the taxpayer's earned income in excess of $2,500 or $1,400 if the taxpayer has one or two qualifying children. Determining filing status is taxpayer married as of the last day. I'm not going to read through all these again. This would be another good one to print out alongside this one. As to determine what is the filing status. If you're married at any point through the year, you can file married filing joint or married filing separate, but not single, not head of household. It kind of goes into all of these. This would be a good one to print out and just kind of go over once in a while. When do you file head of household? When do you file single? Surviving spouse criteria. Year one, if not remarried, you can do married filing joint, and then you would get the married filing joint tax bracket standard deduction, assuming you're not itemizing. In year two, you can't be remarried by the end of year two. You got to be a U.S. citizen or resident. You must have a dependent living at home with the taxpayer paying over one-half expenses of home. If there's not a dependent living at home, then you would be filing differently. We're going to stop it there because the kitty tax gets to be pretty in depth, and that's going to be a fairly long video. So we'll stop this one here for now and see you when we come back.